Welcome back. You're still with us here on Markets Today Talk Back. Big pullback on hopes that the government is going to move and provide some relief on a couple of these thorny issues, especially with regards to the FPI taxation issue. The buzz pushing the markets up to 11,050 or so. Mitesh Thakkar is with us, and we've been chatting with him about the day's action. We're also telling you the big stories of the day. We got through 3 of the headlines, so let's move on to the 4th one. Mid-caps underperformed today, but Siemens and Thermax stood out owing to a strong first quarter performance. However, Cummins sank after it reduced its export growth guidance. Anisha is joining in on what the details of the results were. Anisha.
Well, yes, Cummins was down in trade after the management cut the guidance both for exports and domestic business. For export, they are now expecting a decline of 10 to 15%, and this compares with a decline of 0 to 5% that they were anticipating a couple of months ago. To add to that, even the domestic business has shown considerable slowdown, because now they are saying that they are expecting a growth of 8 to 10% versus the 10 to 15% guidance that they had given us in the month of May. So in the last couple of months itself, there has been an evident slowdown, and that's why the guidance cut. To add to that, the margins will also remain under pressure compared to last year. Moving on to Siemens, wherein the management commentary was sluggish as well, because they talk about delay in order booking. But the reason why stock was up 7% was the fact that the company has decided to put their mobility as well as mechanical business sale on hold. So that means that overhang that was there on the stock goes away. And to add to that, the margin performance this quarter was rather strong. Moving on to Thermax, wherein the financial performance was strong. The profit came ahead of estimates, and that is because the revenue showed a jump of over 30%. But the key theme across all capital good majors is the fact that the order inflow is slowing down, because for Thermax as well, we have seen an order inflow decline 26% year on year, and they say that there is an evident slowdown in the investment sentiment, so that remains the order of the day when it comes to the capital goods companies. Back to you.
Thank you very much, Anisha, for giving us that overall perspective as well, that orders are not coming in. That's exactly what we heard from TV Narendran as well, the head of Tata Steel, just a little while back. More numbers. FMCG major Emami came out with its first quarter numbers. Top line growth continued to be without any surprises, any positive surprises. The stock ended about 1% in the green. Mangalam with the details.
Well, Emami results really had nothing to write home about. 5.5% in terms of revenue growth. The street was working with that sort of numbers. 2% volume growth again was the weakest that we've seen in the FMCG industry so far. And the EBITDA boost of 11% that came in was primarily because the company held back on ad spends by about 9.5%. And as a result of which, the net profit also jumped, aided by other income. The management commentary indicated that there is still weakness in their business, especially in their categories like male grooming as well as healthcare and pain management. So let's see how this comes about. The stock ended mildly in the green but off highs, and remember, it has corrected about 50% from the peak as well.
Okay, thanks for that, Mangalam. Well, Mitesh, there were quite a few of these capital goods companies that did well. Siemens, for instance. You think it can fly more?
See, I think, 2 stocks which at least I could pick up during the day were, L&T and Siemens. I think both of them, at least on the intraday and short-term charts, have given a good reversal. And my sense is that I think you will see follow through in both the cases. For Siemens, I think, I would be working with a target close to about 1185, and once that is being crossed, good chance that 1230 can happen over here.
Okay. All right, thank you very much for that, Mitesh. In fact, thank you for joining us. On the next headline, I have some questions for Prashant. And that last headline was, although Dalal Street saw one of its worst performances last month, that is July, the worst in nearly 2 decades, the turbulence did not disturb the mutual fund investor. The inflows have been largely steady. That's what the numbers seem to indicate. Prashant, can you break up these numbers for us?
First of all, Lata, I think we'll need to, we still don't have this SIP number, which is the systematic investment plan number. And that is essentially going to be pretty strong, because as you said, if markets were so down and out, and for the inflow to actually increase by about 7%, I mean, one explanation is that, well, investors have become extremely mature, and as markets dip, they put more money to work. The other could be that lump sum investment, discretionary investment actually actually went down and inflows into SIPs remained very steady or maybe even picked up a little bit. That is the latter is the trend we've seen now for the last many months.
Okay.
And possibly that is true this time around as well. But we'll need to wait for the SIP number. But for what the numbers we have on our hand, 7% increase, as you see, about 8,100 crores compared to 90 crores in the month of June. Other categories like and here, by the way, multi-cap funds saw a big dip. Large cap and mid-cap funds saw actually pretty large increases, pretty good increases. The numbers are on your screen. 80% drop in multi-cap, 26% growth in large cap, 42% in large and mid-cap, which is sort of a different category. Mid-cap funds saw a 64% increase. They're on your screen. Okay, we have balanced funds, which saw some inflows coming in after many months of outflows, by the way. Actually, this year, this is the first month that balanced funds are seeing an inflow. It's been all negative otherwise, starting from January. Equity ETFs saw a pretty large inflow, 12,353. Wow. But I think this is also because the government was collecting money through CPSE ETFs, and that accounted for a bulk of it. And liquid funds, it's a pretty lumpy category. 150,000 went out last month, that is June. In the month of July, about 45,000 odd came in.
I've noticed that in liquid funds, every quarter end, March, June, you will find outflows.
Big
and in between
numbers.
Quarters, you normally find inflows. Yeah. But it's just that the inflows are looking a little smaller in terms of average. But nevertheless, Prashant, that's good news that equity mutual fund investors have kept the faith. Here's one more good news from the primary market, actually. Affle India, we referred to it earlier, made a bumper debut on Dalal Street today. The stock listed at a 25% premium to its issue price of 745 rupees. This initial public offer of the mobile marketing company was open for subscription for 3 days starting 29 July. It was looking for 459 crore rupees and it was subscribed 86 times. Listen to what Anuj Khanna Soham, the founder chairman of the company, had to say.
Affle actually enables, so the word Affle is affordable mobile, which are combined together. So when we deliver ads into those apps which you're using that are free, so the consumer gets free apps because it's ad supported. Now as a consumer, when you click on an ad and you go on to an install or register for an advertiser's app, that's when Affle makes money, when we acquire a new user for an advertiser.
Correct.
Repeat user engagement.
Correct.
And both are happening online from your phone. So you look at the ad and you convert on the phone itself.
Correct.
That powers our third use case, which is that you look at an ad on your phone, but you actually do the purchase offline.
Okay, so that's Affle and it's had a great listing, and we have to wrap up this edition of Markets today.
Thanks very much for staying with us. From Lata, me, everyone on the team, thank you for watching. More coming up on the other side.